Hey everyone, welcome back to the channel. Today we're diving into Palantir, one of the most talked about AI and big data companies in the market. Palantir just reported its latest earnings, and we're going to break down its business model, revenue streams, and future growth potential. With government contracts, AI-driven analytics, and expanding commercial adoption, is PLTR still a top AI stock to own? Stick around as we go through the key numbers and whether Palantir is a buy, hold, or sell right now. Now let's see what Palantir actually does. Palantir is a big data and AI-driven analytics company that helps organizations process and analyze massive amounts of data to make smarter, faster, and more informed decisions. Their software integrates AI, machine learning, and predictive analytics to extract meaningful insights from complex data sets. Palantir's business model is centered around data intelligence solutions for both government and commercial clients. Palantir's biggest revenue source comes from long-term contracts with the U.S. government and allied nations. Agencies like the Department of Defense, CIA, FBI, and even the UK Health Service use Palantir's software for national security, counterterrorism, intelligence analysis, battlefield operations, cybersecurity, and law enforcement. The U.S. government alone has spent billions on Palantir's solutions over the years. The fastest-growing segment for Palantir is its commercial business. The company has been expanding into finance, healthcare, energy, manufacturing, and retail, helping businesses use AI-driven software to optimize supply chains, detect fraud, improve operational efficiency, and enhance risk management. Major companies like BP, Airbus, and Merck already rely on Palantir to analyze data and improve decision-making. Palantir makes money primarily through a software-as-a-service model, generating revenue from multi-year contracts and recurring subscription fees. Their core platforms include Gotham, which is designed for government and military applications, providing real-time intelligence, battlefield analytics, and threat detection. Foundry, which is used by businesses for data integration, predictive analytics, and operational decision-making. And Apollo, a cloud-based operating system that powers and updates Palantir's platforms for both government and commercial users. Palantir is also aggressively expanding into artificial intelligence, machine learning, and edge computing. Their artificial intelligence platform, or AIP, is being integrated into government and enterprise operations, aiming to automate workflows, enhance predictive analytics, and provide real-time intelligence across industries. Palantir's strength comes from its long-term government contracts, expanding commercial adoption, and AI-driven innovation. But the key questions for investors are scalability and profitability, as Palantir still has to prove it can compete with traditional enterprise software giants like Snowflake, Microsoft, and Google Cloud. Palantir just reported impressive Q4 earnings, with total revenue growing 36% year over year and up 14% quarter over quarter, easily surpassing analyst expectations. Their U.S. business was especially strong, surging 52% year over year thanks to explosive demand for AI-powered analytics and software solutions. The commercial segment was even more impressive, with revenue skyrocketing 64% compared to last year, as more enterprise customers rapidly adopted Palantir's AI technology to streamline their operations and improve efficiency. In Q4 alone, Palantir signed nearly $1 billion in commercial contracts, including major deals with companies like Panasonic Energy, which implemented Palantir's AI solutions to significantly reduce downtime and increase production efficiency, and a leading global insurance provider, which reduced a 2-week underwriting process to just 3 hours using Palantir's AI platform. Additionally, Palantir partnered with a major U.S. pharmacy, signing a substantial $67 million contract, and secured a $40 million expansion deal with a leading telecom company to accelerate network modernization and cost reduction initiatives. Government contracts also remained a key driver, with U.S. government revenue growing 45% year over year, supported by significant new contracts and expansions with the U.S. Army and Special Operations Command. Palantir's advanced AI capabilities, including their Mission Manager software, continue to play a critical role in defense and intelligence operations. Internationally, Palantir achieved steady growth as well, driven by expansions in markets like the UK, where partnerships with the NHS and defense sectors continue to thrive. Their international commercial business saw renewed strength, with long-term partners such as Rio Tinto extending their contracts due to Palantir's AI-driven solutions tackling complex operational challenges. Looking ahead, Palantir remains highly optimistic. guiding for about 31% revenue growth in 2025, targeting nearly $3.75 billion in total revenue. They're betting on their AI and data platforms to continue driving growth through new customer acquisitions and existing client expansions. Palantir's stock initially jumped about 23% after their Q4 earnings report, driven by strong results and impressive revenue growth. However, the stock quickly reversed and dropped sharply in the following days. The main reason behind this sudden decline was growing investor concern about potential cuts in U.S. defense spending. Since a significant portion of Palantir's revenue comes from government contracts, especially with defense and intelligence agencies, even slight uncertainty about future spending can significantly impact expectations for the company's growth. Investors are worried that reduced government budgets could slow down Palantir's government revenue, creating uncertainty about future growth. Despite their rapid expansion in the commercial and AI sectors. Even after this recent drop, I still think Palantir is overvalued at the current levels. The company has strong growth, impressive AI-driven innovation, and a promising future. But the stock's valuation with a very high PE and price-to-sales ratio suggests that most of this optimism is already priced in. For me, Palantir would need to drop further before I consider stepping in. But let me know your thoughts in the comments. Do you think Palantir is a buy now, or is the stock still too expensive? Don't forget to like, subscribe, and I'll see you in the next video.